Minister Lawrence Wong.
Mr. Deputy Speaker, I thank the members of Parliament, Dr. Intan Mokhtar, Mr. Melvin Yong, Mr. Ong Teng Koon, and Mr. Henry Kwek for supporting the bill and also their comments on the bill. Let me address the questions raised by the members in 4 different parts. First, on the design of GST for imported services and how the measures can be effective. I think both Mr. Ong Teng Koon and Mr. Melvin Yong raised questions on how such a regime, GST for imported services, can be effectively implemented. So let me highlight a few salient aspects of the design of this of the proposed measure that will enable us to ensure effective implementation. First, Singapore adopts, as members all I'm sure are aware, a broad-based single-rate GST regime with few exemptions. So this provides a good foundation for businesses to comply with the new GST rules for imported services without much need to classify and ascertain the applicable GST treatment, as the same GST rate applies to most transactions. We built on this foundation by learning from the experience of other jurisdictions and consulting extensively with industry players on how rules may be formulated to impose minimal compliance burden. These include the Business Industry Advisory Committee to the OECD, the Singapore Retailers Association, and the Association of Banks in Singapore. And here I'd like to thank all stakeholders for providing us with feedback. We will continue to engage businesses as we prepare for implementation from 1st January 2020. Second, where possible, we have ensured consistency in our rules with those of other jurisdictions. This eases compliance, promotes effectiveness, and provides certainty for the industry. For example, the scope of digital services that is subject to GST, as well as the definition of electronic marketplace operators under the OVR, the Overseas Vendor Registration Regime, are generally aligned with that in other jurisdictions. Third, our rules ensure that we do not impose unnecessary GST liability on businesses. As I mentioned just now, under reverse charge for B2B imported services, we do away with the need for local businesses to account for GST on the services they import if they can already claim a full refund of GST incurred on their purchases. And then we put in place a 2-tier registration threshold for the OVR regime for B2C imported services, which is based on global annual turnover and sales to Singapore customers. The $1 million global turnover maintains parity with the GST registration threshold of local suppliers, while the $100,000 threshold on sales to Singapore ensures that we bring into the tax net overseas vendors with significant sales to consumers here. These features enable us to focus our enforcement of GST for imported services on these overseas vendors. And this is also in line with the concern highlighted by Mr. Ong Teng Koon on enforcing the system vis-a-vis the millions of suppliers worldwide. By designing the system as we have, I think it does facilitate enforcement and implementation. Mr. Ong and Mr. Melvin Yong also asked how we will enforce compliance for overseas vendors for B2C services. IRAS will make use of various information sources to identify and engage potential registrants, as well as to verify the GST reporting by these businesses. Similar to domestic traders, business audits will be conducted by IRAS on a risk-based approach. We already do this for our regular GST regime, so we will extend this for the OVR as well. IRAS can also use provisions in bilateral tax agreements to obtain information on overseas vendors from other tax jurisdictions. In the event of non-compliance, the existing penalty and enforcement regime under the GST Act will apply. IRAS will raise additional tax assessments, apply penalties, and recover the outstanding tax payable directly or through the appointment of agents. We are not doing this, we are not the first country to do this. So we have learned from the experiences of many other jurisdictions, including Australia, New Zealand, and South Korea, which apply similar penalty regimes to non-resident registrants as with domestic businesses. That said, as I highlighted earlier, many of these overseas businesses have experienced meeting similar VAT GST obligations in other jurisdictions. Many of them are familiar because we are not the first country and they have experience meeting similar GST obligations in other jurisdictions. So we do not anticipate significant compliance issues. Experience from other jurisdictions show that these multinational businesses are likely to comply to avoid reputational damage. On Dr. Intan's queries, not all digital services consumed in Singapore, be it B2B or B2C, are supplied by GST-registered businesses. So there are non-GST registered suppliers for such services. We do not track the number of these services. They may be small and companies or even individual entrepreneurs and providing such services on various online platforms. We do not track their numbers. So Dr. Intan asked about such non-GST registered businesses and the concern whether they may charge GST on their sales. That is indeed a concern, and that's why we currently impose penalties and fines on unauthorized GST collection offences under the GST Act. And in this bill, we have proposed heavier punishment, including custodial sentence and new offences to further strengthen prosecution and deterrence of unauthorized collection of GST. This applies for both local and overseas suppliers. Ultimately, GST is a self-assessed tax. This applies even in the existing GST regime. It is the responsibility of GST-registered businesses to apply the correct GST treatment on their transactions. On the government's part, we will continue to engage the industry to keep the GST for imported services effective, easy to comply, and certain. That way, we make the GST system a resilient one in generating tax revenue to fund public services. Mr. Ong asked how much revenue will we expect to collect from GST on imported services. We expect additional revenue of about $90 million per year. But I should also explain that it's not just about the delta in revenue collection, because this move also seeks to defend our current revenue base from being eroded as more and more transactions move online. So if we were not to do anything, potentially the revenue base may get more and more eroded and we may be losing more revenue. So we have to make this move now to defend our current revenue base from being eroded. On Mr. Ong's comment that overseas businesses may decide to stop their sales to Singapore as a result of the tax measure, well, it may be a concern for some, but I should highlight, as I said earlier, that firstly, we are not the first country to impose GST on imported services. Other jurisdictions have done, and I think this is in line with the global movement towards taxation of the digital economy. Secondly, I think for many businesses, their considerations or Singapore's appeal to businesses is not premised solely on tax alone. Tax is important, but there are many other fundamental attributes, such as our high digital penetration, our sophisticated and tax-savvy consumers, our extensive connectivity, as well as our robust and IT and logistics infrastructure. So I think overall, we are still in a very strong position to be a regional e-commerce hub. Mr. Melvin Yong asked queries relating to the taxation of online advertising services and also asked about consultancy and advisory services, whether they are subject to GST under the new regime. Briefly, the scope of tax under the Overseas Vendor Registration or OVR is consistent with current GST rules and how they are applied to local suppliers. So for online advertising services, whether or not GST is applicable depends on the place of circulation of the advertisement. Under existing rules, media advertisement that is circulated substantially or wholly outside Singapore qualify for 0 rating. Likewise, if provided by overseas suppliers, such advertising services are not subject to GST. So we are using the current GST rules, and if it's 0 rated, then whether it's local or overseas, it will remain 0 rated. And in the same by the same logic, for advertisements placed on the internet, we regard the viewer access as one that is generally global. So such advertisements can qualify for 0 rating and correspondingly will not be subject to GST under the Overseas Vendor Registration regime. For B2C consultancy or advisory services, they will be subject to GST if the services meet the definition of digital services. That is, if the service is supplied over the internet or other electronic networks with minimal or no human intervention. Mr. Henry Kwek and Mr. Melvin Yong asked whether there are plans to extend the GST measures to low-value imported goods. Most jurisdictions have in place an import relief threshold for imports of goods via air and post. Imported goods below this threshold will not be subject to GST so as to facilitate clearance at the border and to ease administrative costs. In Singapore, I'm sure members are aware, this threshold stands at $400. Below $400, there is no need for GST. Above that, you have to pay GST. The taxation of low-value goods is a relatively new tax development, and we are monitoring international developments on this front. Australia is the first in the world to implement a vendor collection regime for overseas suppliers to collect GST on imported goods in July this year. Switzerland and New Zealand and the EU have indicated plans to do so in 2019 and 2021 respectively. So again, as we have done for imported services, we first look at what other jurisdictions have done, we study their experiences, and then we learn from these experiences to see what can be done in Singapore, and that's what we are doing with regard to the GST measure for low-value imported goods. Mr. Ong shared his concern on a digital divide, and that's indeed something that all of us ought to be concerned about. There are several ways we are dealing with this. First, we have in place a permanent GST voucher scheme that provides annual assistance to citizens. This offsets GST expenses for many Singaporeans, especially retiree and lower-income households. We review the GST voucher scheme regularly to ensure that there is adequate assistance for the lower income. Second, as Singapore becomes more connected, the government will also do more to ensure digital inclusion and accessibility. And there are already many programs under IMDA which provide lower-income households with subsidized broadband and devices and access to the internet. In addition, the Silver Infocom initiative offers affordable IT classes to equip seniors with relevant basic digital skills. And of course, Singaporeans can use their Skills Future credit to offset course fees, including for digital courses offered by online platforms. Finally, Dr. Intan proposed introducing differential and higher GST rates on luxury items, as well as items like alcoholic beverages and tobacco products. I understand Dr. Intan's intent. This is not a new suggestion. We have debated this in the House every time we have a budget and we talk about the GST regime. Basically, we agree fully with the objective of having an overall tax and transfer system that is progressive, one where we give more help to those who have less. I think all of us share fully the intent. But we have also seen the experience of other countries with a multi-tiered GST system, which introduces immense complexities in trying to define what are regarded as basic essentials and what are to be treated as luxury goods. In some jurisdictions, attempts at classification have resulted in bizarre outcomes, endless disputes, and loopholes that may very well be exploited and end up being counterproductive. So Singapore's adoption of a broad-based single-rate GST regime, coupled with the permanent GST voucher scheme, is a more equitable approach in creating a fair and progressive tax system. We have a broad-based single-rate GST, but we couple that with a permanent GST voucher, which provides targeted transfers and help at the lower income and retiree households. And by doing so, we create a GST system that is progressive, that effectively has lower tax rates for the lower income, while those with the highest means pay the full rate. Besides luxury items, Dr. Intan also proposed higher consumption tax rates for alcoholic beverages and tobacco products. We are mindful of the negative externalities arising from the consumption of such products, as she has highlighted. And in fact, these are already taken into account by way of excise duties. And so these duties are reviewed regularly and updated from time to time. Mr. Speaker, I hope I have addressed the questions and comments raised by the members. So I will just like to reassure everyone that MOF will continue to review our tax regime regularly to ensure its relevance and effectiveness in the digital economy. Thank you, Mr. Deputy Speaker. I beg to move.
The question is the bill be now read a second time. As many as are of that opinion say aye. Aye. To the contrary say no. I think the ayes have it. The ayes have it.
Goods and Services Tax Amendment Bill.
Committee stage what day?
Now, sir, I beg to move that Parliament will immediately resolve itself into a committee on the bill.
The question is that Parliament will immediately resolve itself into a committee on the bill. As many as are of that opinion say aye. To the contrary, say no. I think the ayes have it. The ayes have it. The question is that clauses 1 to 41 stand part of the bill. As many as are of that opinion say aye. To the contrary, say no. I think the ayes have it. The ayes have it. Bill to be reported. Minister.
Mr. Speaker, I beg to report that the bill has been considered in committee and agreed to without amendment.
Third reading, what day?
Now, sir, I beg to move that the bill be now read a third time.
The question is that the bill be now read a third time. As many as are of that opinion say aye. To the contrary, say no. I think the ayes have it. The ayes have it.
Goods and Services Tax Amendment Bill.
Leader Laos. Deputy Leader.
Mr. Speaker, I beg to move that Parliament do now adjourn to 12 noon tomorrow.
The question is that Parliament do now adjourn to 12 noon to tomorrow. As many as are of that opinion say aye. To the contrary, say no. I think the ayes have it. The ayes have it. Order. Order.